Okay, hello and welcome. I'm Jason Gumpert from MSDynamicsWorld.com, and we're here today for a new session in our Fall 2015 Financial Automation webcast series. I am happy to welcome today a new speaker for us, Larry Cox. Larry is a business consultant at Columbus with expertise in corporate financial management and Dynamics AX. He's had a range of financial management roles inside and outside the Dynamics space, and it's great to have him with us today. And before we get started, I'd also like to recognize our Financial Automation Series sponsors and thank them for their support of MSDynamicsWorld.com. They are Perceptive Software, Metafile, Esker, DocStar, and Avalara. So as we get started, please know that you can use the Q&A block that you'll see to the right of the webcast session's main panel to ask questions and provide your thoughts today. We'll be taking questions, but feel free to enter your questions throughout the event. Larry will save time to answer those. So without further delay, Larry, let me hand it off to you.
Okay, thank you very much, Jason. I appreciate it. Good afternoon to everybody, or potentially good morning. Thank you for taking an hour out of your Tuesday to take a look at this subject. We're going to talk about centralized payments and Dynamics AX. In addition to the technical side of this, we'll also take a look at the behavior side as well. So, certainly we're going to look at some functionality, but maybe an important consideration is why it's not used as much as it could be. And I'm going to actually address that pretty early on. Just a little bit of background about myself, and I typically wouldn't do this for an hour presentation, but I will in this case just because it segues a little bit into what I'm going to be speaking about. I come from the traditional financial corporate management background. You can see the CPA, CMA, so I've come from that space, certainly. Did that for about 20 years, and then I actually went in Dynamics consulting. And 12 years of that, I was working with Dynamics Nav, both as an implementation consultant and actually as a developer. And so I did my share of programming and writing code. And then about 4.5 years ago, I started to transition into Dynamics AX, and brings me up to the current point. All right. So how that segues into what I want to speak about. Talk about my original encounter here, which I know may sound a little bit strange, but the part of my corporate financial management career was taking over as corporate controller for a decent-sized company. They were a medium-sized manufacturer. They actually also had some retail stores and some distribution, multiple companies. And when I took the job over, first thing I noticed, there were drawers full of checks. And I was like, well, why do we have all of these checks in here? And it's like, well, we really don't have the money to pay the other company. Now, these are, again, this is all under one corporate umbrella. So it's like, okay, well, that's kind of weird. And then the other thing I noticed early on in our operations was the fact that it was a big deal to load check stock. Now, remember, this is back when we still had line printers and not using laser images. So they had different pre-printed stock for each of the companies. So it was a major chore to load and reload the stock for the different companies. And early on, one of the things I figured out was that they had a ZBA, which if you're not familiar with it, it's a zero balance account. Basically what that does, the bank concentrates all of the subsidiary bank accounts into one central account at the corporate level, which then usually is used as collateral for a credit line of some sort. And that was true in this case as well. So that was the reason that they really had no money in the other companies, was because, well, any money at the end of the day, even though they had a bank account, it was all getting transferred to the corporate level to begin with. So I said, well, there has to be a better way to handle this. And as soon as my slide transitions, so the remedy was, like, let's just let the parent company handle all of the cash for the subsidiaries, and whatever the offset is, we'll book intercompany entries to take care of that. So we just essentially have one main checking account, because we had a ZBA account anyway, right? And this was just so much easier. And one of the last points that I had as well, we were writing multiple checks to the same vendor, in effect, sometimes to the same address. So we would, places like FedEx and UPS, we're writing a check in one company, then we turn right around and write another check to the same company. So again, it eliminated that by going to one checking account. Okay, so I fast forward here into AX, and I should back up just a second and mention that this came up in NAV a couple of times, and we really didn't have, at least at the time, something that was similar to that. Now, I haven't been keeping up with NAV in the last couple of years. Maybe there is something there now that I'm not aware of, but it wasn't there. I did have one client that we kind of did something similar, but we had to do a little bit of modification to actually make it work. But AX takes care of this. So they have a function called Centralized Payments. It was introduced in AX 2009. It's really designed just for this purpose. And the thing that I think is pretty neat about it, it really is the best of both worlds. So what happens, you're entering and managing your payables and receivables at the individual subsidiary or company level, but one company ends up doing the cash side, i.e. making the payments and then also receiving the cash. Okay, so one of the questions that really came up was, why is this not more popular than it is? And I've battled with this one for quite a while. And if any of you that have come from the accounting side, you know that back in college, and I forget what year it was, we had this concept called substance over form. And what that really related to was, well, why don't we really worry about what we're doing with the transaction rather than the form? And in this particular case, the form was an individual check that was being written or received, right? But the substance was, yeah, it's cash. So, I think that's kind of where that started to get off. And then you see my question, why the resistance to centralizing functions? We always talk about eliminating duplicate functions when we're buying a company or acquiring one, and this would be a very classic case of, if there's anything, this is sort of low-hanging fruit, quite honestly, if you think about it, that we can eliminate bank accounts, and we'll talk about the benefits. So part of my thinking is maybe this is just momentum when companies are acquired. And I honestly think this is part of it, that, okay, this company, they're writing their own checks, they're getting their own cash, well, let's just keep this going in the future. So, well, okay, sometimes, it's easier just to keep things the way they are than to actually make a change, even though that change may be more efficient and more cost-effective if you really thought and analyzed it. Then, and I'm saying that paying and receiving cash should not be a controversial subject. We're not talking a costing methodology, we're talking anything management supplies, anything of that nature. And part of the problem, I think, is that maybe it's almost kind of a checkbook mentality. And what I mean by that is that, just as we are in our personal finances, if we end the month in the checking account, then we spent, well, okay, that's good. And I've often thought that this has turned out to be just that, sort of a quick way to take a look at determining profitability without really going full. So once again, we're mentioning the checkbook mentality. It's just a quick way to see if we're profitable or we're not. All right. So looking at some of the real benefits for using the centralized payments. We have no jumping between companies for cash receipts, payables management, etc. All right. So that's, if you're using AX, well, yeah, okay, I have to go up there and click the jewel, which you'll see me do in just a minute as we actually look at the demo side. Don't have to do that. I've got one checking account I have to reconcile, okay? If I'm using pre-printed stock, I know a lot of people don't anymore, I only have to load it one time. I've got it. I can do one check run and take care of the other companies. Certainly, I can reduce the mailing costs because in my example, I'm not having necessarily to send multiple checks to the same vendor or figure out how I collate those into the same envelope as they go. Okay, and come on, we'll advance, there we go. So we've got even more benefits. Sometimes there's bank fees that are related to transactions, so we've cut back the number of transactions. We are talking a single customer statement, and I'm going to take a quick look at that and show you what the format is. So again, to the customer, they can see their statement from all of your related companies. Just easier to manage cash in general. The less is more in many instances, and this is generally true here. And this one actually kind of surprised me a little bit, but we were approached by a company that wanted to do centralized payments just for this reason here. Their point, and I guess I never really thought about it, was that they could go out and say, hey, wait a minute, we represent all of these other companies. So effectively, they ended up on the procurement side with more power because they were promoting the fact that they were dealing as one company versus, whatever the subsidiary's name was. And this was a company that had a lot of different subsidiaries. So, I thought, yeah, that makes sense. I mean, that really turns out to be true dollars and cents savings just beyond what you're saving on the transaction side. Okay. All right. So I want to move forward. And we'll actually go into AX here in just a second. I'll mention a couple of things about the environment that we're going to take a look at. Just a couple of I got ahead of myself here. So what we're going to see is I'm going to take a look at the organizational hierarchy. This is part of actually setting up AX for centralized payments. And this is a somewhat new piece that's in AX 2012 versus AX 2009. We'll take a look at the payables and receivables in the subsidiary company. I'll go through the check generation process from the parent company. That will include payables also from the sub. And then we'll go on the receivable side and kind of do the same thing for cash coming in. And then we'll look at the format of a customer statement. Even though, let me just show you a couple, there we go. All right, just a couple of assumptions. This is an AX 2012 R3 standard Contoso database. There's actually not a lot of changes I had to make to it to make this work. Primarily, it was taking a vendor from one company and copying it over into another, which the system supports natively. Just if you're accustomed to the AX demo environment, the way this is set up, the parent is USMF, which is, I believe, Contoso Entertainment, and then the sub is USSI, which is Contoso Consulting. We're going to use a single vendor. Their name is Superior Hardware Distributors. I have them in both companies. And then customer OWL Wholesale is in both companies as well. And the OWL Wholesale is already set up as the same company in base Contoso. So that one I didn't even have to really do anything to make this work. A couple of points. Even though my customers and vendors have the same name, they would not necessarily have to, right? So, you know, I mean, we had Superior Hardware Distributors, but maybe in one of the other companies that's, you know, a different name, and that's fine. You know, as long as we've got the relationship set up, we can pay on their behalf. And the other point is, for simplicity's sake and the length of time that we have, we're only using two companies here. But you know, what would be real exciting is, let's say we had 20 companies or 30 companies, and then we're really leveraging the ability to, you know, minimize the overhead of creating, you know, checks or however we're paying these things, okay? So that being said, I'm going to flip over and we'll get into AX. All right, and I'll assume that we're taking a look at my AX at this point. The first thing I said I was going to mention was just to take a look at the organizational side of this. And what we're doing is going to show a hierarchy. And we have a hierarchy named Centralized Payments. Okay, that's appropriate. And we'll just take a look at this. And we'll see that here's my Contoso Entertainment, and here's my Contoso Consulting that's actually reporting up to it. The point to take here is, if we take a look, there are these things called purposes. And we'll just take a look, and under Centralized Payments, voila, there is a purpose called centralized payments. Okay, so we're saying that this organization hierarchy is specifically to accommodate centralized payments, which we're doing. All right, and we'll get into some more setup after I leave AX and go back to the slides. All right, we'll take a look. Get out of that. We're going to go ahead and take a look at what we have on the payable side. We'll take a look here at one of the vendors, my superior hardware distributors. It's this guy right here. We'll take a look at the transactions. I put two invoices in here, and just to make sure I could see those in the main company easily when I combine those, I put the prefix of the company. So that's why these two guys are USSI. Okay. The other thing that, since I'm here, that I'll show, and this is very, very true on the customer side as well, as so many customer features are the same as vendor features, vice versa. This is the key piece right here. This party association has this number, this maybe cryptic number. What this number is an identifier in the global address book, if you're familiar with that, which is a repository for everything across the company, and where we can reuse names and addresses and things like that, and do some other things with it. So that's the key. So if we go to this same vendor in the parent company, USMF, we'll see that it shares the same party number as well. And again, that's the global address book, which sits up at the DAT level above everything else, right, across all companies. All right, so we saw my two invoices. So what I'm going to do at this point is, and I had a note to make sure I didn't just try to do this from USSI, but I'm going to switch back to USMF. Okay. And from here, I do have, and I can show this real briefly. If we look at all vendors, and come on vendors, we'll see that down here I will have superior hardware distributors, okay? And as well, I went ahead, and just to show that it's not smoke and mirrors, I have two payables in here, and notice I put my invoice number as USMF, just so I can keep track of those. All right? So we'll actually go ahead and start the process to create a check. So let's go over here to the payment journal. And I already started one, however, it is sans lines at this point. Okay, so I'm going to actually do a payment proposal. And this is all fairly standard. I want to put a total payment date of today. Okay, and I went ahead and just, I set a date range just so I wasn't getting other sample data earlier. Notice that we do have a section down here entitled Centralized Payments. And very easily it says, well, do you want to include invoices from the other legal entities? Well, yes, I do in this case. And I'm going ahead and saying that I'm doing it to a bank and to this particular offset account. The reason I went ahead and filtered this on the method of payment check was mainly I'm trying to restrict some other payables that will fly in, although there's nothing says that I couldn't include those and then just not, just not pay them. So we'll go ahead and let it do its thing. And notice that what it picked both my my USMF invoices and my USSI invoices together. So essentially I'm going to have a check for, this is my $655, which is including the payables from both companies. All right, so which is our objective, right? We're doing one particular, just one check and taking care of all of the payables that we need. And, just to mention, this is, as you saw from the payment proposal, we can decide if we're going to pay that other company's payables or not, right? And another question that you might have is, well, for some reason, let's say that other company still wants to pay their payables, or maybe there's some reason that we're not going to do it consolidated. That actually still works, right? So, I mean, effectively, they would go ahead and they could pay it, and then it's just not available to be paid at the entity that's actually set up to be the central payer, or what I'm calling later the cash entity. Okay, so I would go ahead. I can create the check. I'm going to dispense with that for the moment. I'm going to jump over to the AR side. Before I go, I'll mention one last thing that somebody might have a question on, and that is, how does it appear to somebody in the other company that's looking at their payables? And when I've done it, the way it actually looks is almost like there's an invoice, or sort of like a credit memo, that's coming from the other company that just sort of magically took care of the payable. It doesn't necessarily show that it's a check that took care of. And at first I thought, well, that doesn't make a lot of sense. But then the more I thought about it, I think it actually maybe does, because, maybe you don't want somebody at the subsidiary really knowing kind of what's going on, or accidentally getting access into the other cash side that the parent company, or whoever's doing this, might be doing. So just to, that was one of the questions I had as I was going through this. All right, now we'll switch over to the AR side, and it's not been transferred. Let's see. I mean, I certainly could transfer this, and it's what we'd expect. It's ready to generate the check and post and do the rest of the process. All right, so I want to flip over to accounts receivable. We're going to see almost the identical scenario here. We'll do the payment journal, and there's already something on here. Let me just make sure that that's blank. Okay. I'm going to enter customer payments. And this was the OWL wholesale. I'm going to take the time to set a filter. We don't have that many in here. That's this guy. And, okay, here we go. We can see there's a couple of other, looks like Contoso or maybe whoever else was using my Contoso database that put some entries in here. These aren't the ones I'm interested in. These are. Okay, so, and once again, the point being, oh, there we go. The point being that we have both companies represented at the same time. So I can go ahead and save in journal. And the payment amount, okay, well, that's a very good point. I should have put my, since I didn't know what that total was, I'm just assuming I have the check. And it's going to come across. Okay, we'll close this guy. And we look at our lines. There's our 459 that's sitting in here. And see if our, between the company, okay, I'll talk about this in a second, which is part of our setup. But you certainly see the point. It's bringing, we're bringing in cash for both companies. Actually, I thought I did have the intercompany set up, which I checked before I got on the call, but it's telling me that it doesn't. And what it's really saying is that, hey, I can't figure out how to dispose of this in one of the two companies, either in the parent company or the subsidiary company. And that is, I don't know how to, what account numbers you're asking me to put this to for the backside of that transaction. All right. I debated on the customer statements, actually running one, and sometimes they can take a little bit to crank up, so I said I'm not going to risk it. But what I did before we got on here, I went ahead and ran one from one of my other environments just to show what the format was. And I promise that either I'm not clicking fast enough. Come on, there we go. All right. So, which I don't know if I like this or not. This is just the base report in AX. It actually breaks it down by the individual companies. Personally, I think it would make more sense, and I know this could be modified to do this, where it would just list everything, and then maybe say, here's the, on the line, if you wanted it, yeah, here's the company that actually had the transaction itself. All right. Okay, so that's my AX portion. Okay, back on the slides. A couple of things that need to be decided. This is part of that intercompany setup as well. Payment discounts and exchange gains and losses. those are pretty important considerations. And the reason they're important considerations is because you have to have a decision on who gets it, be it a good guy or a bad guy, right? And you know, that can make a difference to some organizations, and we've seen that before. You know, in some instances, like, hey, you know, we if we're paying the cash, then we're getting the discount in this one company. AX handles it either way. I mean, it's a decision process on both of these in terms of, you know, whether he keeps it or it stays with the parent, and you know, just how you want to handle it. So that's certainly an important consideration. All right, now for the basic setup elements, you know, what has to happen? And I thought about, you know, going in the system, and certainly if somebody needs to look at one of these, we can when you address the questions. But the organization hierarchy setup, right? We have to have a hierarchy set up, and it has to have the purpose of being a centralized payment. And that one is one I showed you when we were over on company USSI. The second one is the intercompany accounting setup. I said in the cash entry, technically that is really has to be in both entities. And you know, like I said, don't ask me why. I checked both before I got on, but I still got the error, because either side has to know what intercompany accounts hit for the backside of the transaction. The next one could be a kind of a big undertaking, or maybe not, depending on the scenario. And basically, every vendor and every customer that you're going to use centralized payments for has to exist in the cash entity, right? So, you know, if you had a scenario where you were combining, you're going to do this for multiple companies, and let's say there was very little commonality between the companies in terms of vendors and customers, well, yeah, that's a bit of an undertaking to get those added into the parent company, and one that would have to, you know, happen as time went on, as you know, vendors and customers were added. Now, on the, you know, the nice side of that, there's a function in vendors and customers that says, hey, create me in the other entity. So just from an individual record, let's say I'm looking at a particular vendor and they're not in the company that's going to be paying, all I have to do is just click that. It has one or two, you know, boxes. One says, what company are we putting this into? I'm sorry, I should say legal entity instead of company. I'm aware of that. You know, which legal entity are you putting it into? And the other is, what kind of hold status should there be on this vendor when it's created? The other requirement is that you cannot have your vendor numbers in the cash entity be set to manual. The reason is because if you use that function, it's just going to go ahead and create, you know, it's going to use a number to do its thing, and you know, pull one from the sequence, which is basically what I did when I brought the Superior hardware distributors in. Right, I just went over and did that function. Unfortunately, I had to temporarily turn off the manual flag on the number sequence just to let it assign it, and that's why it had a number like, you know, 4 zeros and a 6, or whatever the standard Contoso number sequence is. Okay, if you have existing vendors and customers that are related between the companies. So, for instance, I've got a FedEx in one company, and I've got a FedEx in the other company. Yes, they're going to they're going to use the same address. Then there is a function called merge, which lets you merge these two guys into the same record in the global address book. And this one is accessed in kind of a place that I rarely go to, which is under the home page. If you go there, there's global address book. You can find your these entries. So I'd find both of my FedExes and say, aha, these are the two same guys, and then there's a merge function, and it essentially puts the two together into one number for that party association that we took a look at. All right, next requirement is the posting profiles must have the same name. Okay, so it doesn't say they have to have the same accounts or anything different. They just have to have the same name. And as long as they have the same name, that seems to work. And then lastly, the methods of payment is the same way, right? As long as they have the same name, then the centralized payments will work and do its thing. And I'm sure that's one of the things it looks at is it's pulling it together, which I guess really, if you stop and think about it, does make sense, right? Because at least the method of payment, I can see that more so, because the method of payment is always one that is considered anytime you're doing a payment proposal and generating payments, be they checks, ACHs, or some other form that's there. So that was basically what I was going to mention on the setup. Honestly, I think other than making sure you get the vendors and customers in, and of course doing the association between the two for the existing ones, beyond that, I think that the setup is relatively easy. And again, this is one that you're kind of looking at the long-term benefits. So that being said, I will entertain any questions or comments, and my apologies for the audio at the beginning. I had tested the headset, but things happen sometimes. So I'm going to expand this hearing. Okay. It said they only started after testing, of course. Okay. We also show something regarding centralized payments and bank transfers. Well, I wasn't going to really handle that per se, because the bank transfer itself should be able to be handled even outside of centralized payments. Because if we take a look at, and I can switch back to AX, but if you take a look at just the general journal, right, we can specify another company as the offset in our general journal itself. So we don't, we're doing, we can transfer the, bank amounts between companies or even between banks just using the general journal itself. Whereas in this case, we only need to um, pick up, what we're doing primarily from the customers and vendors is really what it's, what we're really doing in this case. Okay. I imagine this won't work for payroll, correct? That's a very good question. To my knowledge, given that it's going to when you're specifying the cash account on payroll, and I assume we're talking about AX payroll in this case, where we're actually generating the checks. I don't believe that it does. That's a very good question, and kind of segues back to the point I was just making about this primarily being to offset customer and vendor payments. And yeah, I certainly that's certainly a legitimate point. Let's see, Laura, can AX manage the credit debit position of the subsidiary towards the holding company and compute interest on those positions? That's I don't believe, I would say that's even more outside of the centralized payments. I know exactly what you're talking about with, in other words, we have an intercompany account, and hey, if the entity ends up owing us, do we collect interest on that, on that receivable that we have from them? That's kind of more of an intercompany question. I don't believe that it does, but I have to probably have to punt on that one specifically. But and this is, I've actually at one point in my career I was doing just that at a Fortune 100 company. But I have to admit, that's the first time I've encountered the question for AX, but it's certainly a very good one. I wish I could give you a better, and certainly, Laura, I have no trouble finding that one out because I'm curious about that myself. It just hasn't come up before. Okay, that's the last question that I see.
Larry, have you touched on the question about one check for multiple companies, receivables?
Oh, I'm sorry. Oh, how did I miss that? Okay, sorry. Any issues with vendors receiving one check for multiple companies' receivables on their side? So I'm just going to make sure that any issues with receiving one check for multiple, oh, I see what you're, from the vendor perspective. I have, in the years that I have been doing this, I don't know that I have ever, and I'm really trying hard to think if I've ever had, anybody that had a problem with that. Keep in mind that the other side of this, you're really going to be doing a check for an individual address, right? So, where I've had issues in the past is a classic example is like UPS, right? UPS has different regional service centers that process, and they all have different addresses. So, obviously you can't send a check to one guy when they've really specified the other, right? Or their other location. so that being said, that's kind of an instance where it really is, you're kind of not really combining up the vendors necessarily just for that reason, because you can't, from their perspective, they're not going to deal with just having one, just having one check on the other side because of their own limitations, effectively. But on the others, no, I can't really think of any. And in some cases, I've had, it really helped in the relationship side with dealing with the supplier as well. Because when it came to looking at information, or somebody came wanting information like on, what's been paid, whatever, they come to one source. They're looking in one vendor, and that's taking care of everybody. So, but anyway, apologize for missing that question early on. And have I picked any?
We do have one more question there.
Okay. Is there a critical mass of payments collections in order to have substantial benefits from centralized payments and collections? Well, that's a good question, and I think really depends on a number of factors in terms of the organization, right? As I see it, you really take a look at what kind of effort that you're, that's being expended on the process, and I think the other side of it is taking a look at what's going on, how many subsidiaries that you're dealing with, and from that standpoint, determine where you need to go. So, if there were just like two companies together and they're kind of have been doing their own thing, going back to my earlier point, and they all had very different vendors and customers, then yeah, even I could argue that you're probably not going to maybe gain a tremendous amount. But if you start having multiple entities, and you have people spending their day writing checks in the individual companies, or posting deposits, then yeah, there's some real there's definitely some benefits. So you really have to look at all those factors to determine if it's worthwhile pushing it over and actually doing that. And to go back, when I talked about my personal experience as a controller, not that we completely eliminated a person, but we kind of did in the end by combining getting everything into one cash account. We were sort of able to really do with one less head count to do it, and which really saved us operational dollars in the end.
Larry, there was a follow-up question that I just spotted. I don't think you had visibility to it, about the question about any issues with a vendor receiving one check, any issues from the vendor perspective with a vendor receiving one check from multiple companies' receivables. And the follow-up was, what about when there's a difference in currencies, meaning for subsidiaries with all different currencies?
Well, it would, as far as, certainly, from the centralized standpoint, right, we can deal with the multiple currencies. As far as the vendors are concerned, yeah, there shouldn't be a lot of, I wouldn't see where there should be a lot of concern on that side. I guess I'd have to look at maybe a particular situation, but whether the check is being generated in a different currency at my subsidiary versus generated in that currency at my parent, as long as the vendor, or yeah, the vendor is recognizing that, yes, this is the same company, then I don't see why there would be an issue in that case. And I'm trying to think back to, I have had that situation come up, certainly with some Canadian payments along the way, which was never really wasn't an issue. But I guess it would depend if maybe there's something specific that could be a problem for a vendor in that regard. But otherwise, you're just doing something on behalf of the other guy.
All right. Well, we appear to be through the full question queue at this point. Okay. I just want to remind folks there is a quick survey that pops up after we close out. Please do look for that. We really appreciate the feedback. Our speakers do as well. And with that, yeah, let's start wrapping up. So we have recorded today's event. We'll be making that available soon. We'll send everyone a link when that is ready. And Larry, let me just take a moment to say thanks to you for presenting to us today.
Oh, more than my pleasure. I have enjoyed this and appreciated the opportunity.
Yeah, great. It was fun. Thanks for all the questions from the audience too. Really appreciate that, and we hope to see you again online soon. So with that, we will conclude today's event. Have a great day.